Hello traders, this is Blake Morrow and you were listening to the daily Roundup webinar. Another day of a lot of volatility. I wanted to give you guys just a quick update on the markets as I normally do at this time of the day. But what I was just listening to just a little while ago was Dave Tepper from Appaloosa Management. And I was really focused on what he had to say because he's a guy that the market really looks to. And I to hear him being so timid on CNBC and really apprehensive, it is a little nerve-wracking if you are bullish risk, if you think that stocks are going to be moving higher. He was basically kind of wishy-washy. He's like, yeah, I mean, if you want to buy some things, I'm nibbling, maybe in a year and a half, if you're thinking more long term. He's like, I think we could actually go lower. And that's not the typical Dave Tepper balls to the wall investor that you hear. And he's like, I'm in. Hold on one second. My office, it's a little loud here. So anyway, I was listening to his interview on CNBC, and that the market was hoping that maybe he was going to be a little bit more optimistic, and he wasn't. And that's not necessarily what's keeping downside pressure on the equity markets, but I think it would have helped, maybe the herd mentality a little bit if we would have gotten a little bit more of a bullish Dave Tepper. But what I am looking for in the S&P, just to kind of put you guys, give you a little perspective here. Here's a 4-hour chart, and we're in a down channel. So while we're below, and this is my same attitude I've had all day, as long as we're below this 2,500 level, there's no reason to be on the long side. The channel top comes in around 2430. We couldn't even really knock out 2400 before the rally just kind of petered out. And that's important to know. And really, these are the two benchmarks for me to be long risk. When I say long risk, what does that mean? Well, maybe long emerging market currency, maybe long some cable, maybe long the Canadian dollar or the Aussie dollar, something like that. I have to see a couple things happen. First and foremost, I want the S&P above this channel resistance, and then really what I'd love to see is and I drew this out for whoever I was talking to earlier. We really have to get back above like 2,500, the previous underside of this trend line, before I'm like even super confident that stocks are going to have some sort of bigger recovery. That just is not the case right now. So you have to keep looking lower. Now, there are, when we think about that, we're like, okay, well, what does that mean for currencies? Well, if you look at the euro dollar, as long as the euro dollar is trading below 108, I don't think there's any reason to be long. We just probed above 108 and it's showing failure already. The cable continues to trade very heavy. I mean, we're nearing our trend lows down here. Maybe we develop some inverted head and shoulder pattern here. Maybe, but are you willing to stick your neck out right now and try to pick a bottom down here? Not me. What I think is probably the better trade out there, which I mentioned on the week ahead video, I mentioned it this morning, and I happen to be long, is gold. I think gold is is where you want to be. Now think about this. In this type of environment, do you want to own something tangible? Yeah, gold may be like, you're like, well, what is it good for? Well, I don't, it looks pretty, but there's limited amounts of it, and it is currency in its own sense, right? And when you're flooding the market with so much real money, or I say real money, fiat money, inflation could become a problem. Then you want gold as an inflation hedge. I'm very happy that I have physical gold, personally. Just telling you guys that personally. Even though I happen to be along a little gold futures right now. But gold, I think, if we get back above 15, this is the 1560 level, it's going to be a big one, because that was a big breakout area. This move lower probably got rid of a lot of longs. We are making a higher low. So a move back above 1560 would be a pretty bullish event for gold. We're nearing it right now, and we're nearing this downtrend line, which I think is going to be a huge feat for the gold market if we should get up there. Remember, we're going to be unleashing probably $3 to $4 trillion in fiscal support for the U.S. economy. That's a lot of money hitting the market. I, like I said earlier this morning, and I said on the week ahead video, I think that's going to really keep gold prices supported. So just keep that in mind, for the day, or maybe for the next couple of days. I think gold is one of those things that you want to keep an eye on. Now let's take a look at the dollar index itself. Dollar index continues to stay strong. A lot of people, are like, well, we're at the 161% extension of this move, but my argument is, and it continues to be, what is going to stop the dollar? Especially if we start breaking out above 103.50. This is a big resistance level. What's going to stop the dollar, especially if we continue to see risk off environment? Who's going to want to sell the dollar? I think people are going to continue to have this big demand for dollars. And on top of that, we're heading into month end. Over the next week, I know month end is actually next Tuesday, so in 8 days, but the demand for dollars could really still be there, especially if stocks have not bounced at all. So trying to pick a top in the dollar, I think, is a very dangerous game right now. And really a move above 103, above this level here, it'd be very bullish. Okay. So keep an eye on the dollar. I don't think that the dollar is right for a fade. And I know a lot of people that have been trying to do it, and, obviously unsuccessfully at this point in time, unless you're just kind of scalping around. But be very, very careful with the dollar moving forward. What else did I want to cover really quick? I covered gold. A lot of you might ask, well, how about silver? Silver is an industrial metal, so I'm not as bullish on silver as I am in gold, although silver has had a nice, move to the almost 161% extension, but we really have a lot of work to do right here in order for silver to turn bullish again. We'd have to get above 1350. Okay. But yeah, guys, it is very dangerous out there. The market is extremely volatile still. Keep your position sizes small. Don't overexpose yourself. And, if you're wrong, be wrong early, be wrong quickly. If you're right, take some profits along the way, move your stops, protect your stops. Be mindful of the trading ranges that we're seeing intraday, and keep your head above water. Remember, you can always fight another day as long as you have capital in your account. So being able to take your losses early and move on is so vitally important in this market. And remember, we have with ForexAnalytix, we have a volatility offer. We enacted it last week. It's so you guys can be involved in our community. Take advantage of it, especially if you're out trading on your own. This way you can go into our chat rooms that you see here, where we're all talking, going on and on and on about, the markets and about what's happening, and, posting charts. And, sometimes we try to joke around a little bit just to just give you a smile a little bit in this type of environment, because I know it's tough. But guys, gals, I want to thank you for tuning in with me today. And real quick, Juan asked about the Aussie yen. I don't know what to do with the yen pairs. I think the yen pairs is not where it's at right now. It's not. I mean, the Aussie yen, I guess, is trying to bottom, but is it moving with risk appetite? Is it moving with risk aversion? I really don't know. And so all these yen pairs are a little beyond me. I don't really know how to play them at this moment. Although the dollar yen, I think, is going to continue to rally, and you guys should know that I believe that we're going to be, making our way up towards 115 at some point. So, but am I long dollar yen? No, I'm not. I keep trying to buy it on dips, and it just never gets to where I want it to get. Anyway, Pete says, we watched the face recording. You mentioned the 108.30 area, 108.30 area for the, oh, as far as the euro dollar goes. Yeah, I mean, if you could be on the short side up there, when the euro actually popped above 108, I didn't take advantage of it. I think I was actually in the shower at that moment. So, yeah, yeah, you really have to be on top of these things. You know, I had an order to sell the euro at 107.30 this morning, and I sold it, and then I already covered it, and then I just kind of stayed away from it. So anyway, but yeah, it's hard for me to leave orders out in the market too long, not being managed. You know what I'm saying? I do it every once in a while when I'm sleeping, but when I'm in front of the computer, I try to manage my orders when I'm in front of the computer, because I just don't want to get upended on something. Anyway, all right, guys, have a great one. Thanks for tuning in, and I'll see you tomorrow morning on the FACE webinar. You guys have a great one, and thank you.